Okay, fam, welcome back. So today I want to go over QDTE and whether it's a good investment to buy and also the total return that we have as of right now. So with that being said, let's get it. All right, so the first thing I want to go over here is the actual chart of the NASDAQ. So there's something you guys need to understand about this fund. It is based on the NASDAQ. Okay, the NASDAQ is a little bit more volatile than the S&P, which means what for the price of QDTE? It means two things. The payouts are going to be higher because, again, options premiums are based on volatility. So the payouts for QDTE should almost always be higher payouts than that of XDTE, even though we have both. But in addition to that, that also means that the price fluctuations of the share price of QDTE are going to be much wilder and more explosive to the upside and the downside as well. Again, the QDT or the Nasdaq is much more volatile than the S&P because it's much more tech heavy weighted than the S&P 500 is. Okay. All right. So I'm going to go over here to the actual kind of performance of the share price over time. So you can see on inception, it opened up at 46. Of course, we all know this was a swing low in the market right around that March, April timeframe, and then it went back up. So this thing from lows does have the ability to recover its share price. Then we had this crazy flash crash in August. We have not fully recovered yet from that dump, but in my opinion, when the NASDAQ pushes to all-time highs, which you can see it is clearly not at all-time highs yet, but when it does, I am convinced that QDT will go back to all-time highs. All right, so now I want to take a look at the dividend history. So you can see we currently have 112 shares, roughly down. Unrealized losses down roughly about $390, 7.5%. That's really honestly not that bad. Okay, just going to take a click on the dividends tab real quick. So you can see the overall dividends history here. We kind of slowly got into this, weren't really sure about the fund. And as we saw how it started, how it was basically starting to perform over time, we decided to add more and more and more. So you can see all the different dividend payments out here we've collected for quite some time. So in terms of the actual dividend payments, the total here is $597.36. Just to save you guys the trouble of adding the math, I decided to do it myself. And then in terms of the total gains, this is, again, selling the shares for a profit every time they're in profit. That total is $161.24. And of course, we do not sell the shares right before the X date because, again, we do still want to get paid that passive income. So in terms of the actual gains, the dates that we sold for profit was on 6/12, 6/17, 6/18, 7/9, and 7/10 of this year. Already went over the total number there. You guys can go back to those buy, sells, and dividend videos to see all that for yourself if you're interested. We do those videos once a week. So the point I want to make here is in terms of the total profit that was made between dividends and basically, well, taking profits is $758.60 year to date. And then, of course, this number is not going to be exact because, again, the market is open and the share price is going to fluctuate a little bit. But we put in 384, which is just about right in terms of the drawdown in the accounts. So as of right now, we are still positive return, 374.60. So the thing I wanted to point out here is that we have $5,170 in total invested into this particular ETF. So when I go to the total return calculator here, you can see we basically put obviously the profits minus the losses, divide what the percentage is out of the total amount invested in dollar amounts. And the total return as of right now, since the time that we first bought into this fund, is roughly about 7.24%. And again, if I go back down here and look, you guys can see we've had this for about 6 months. So again, that is a 7% return over 6 months. That's not bad. Now, let's say, for instance, that QDTE was sitting at break even right now. The market started going back to all-time highs by the end of the year, which in my opinion it will do. I don't see any reason why it wouldn't. I mean, Q4 is always bullish for stocks, almost always, and it's almost always bullish for crypto too. Let's just say that basically the drawdown was 0 instead of 384 in this case. The total return here would be 758.60, which is what I think is going to happen. And again, I'm usually not far off the mark when it comes to these things. So you can see here then the total return, not including future dividends or investments, would be a total of 14.67%. So some people would say, well, this is not a great fund because it pays out too much and the share price decreases over time. And in my opinion, those are all things to definitely be concerned about. That's why we actively manage this position. But I mean, look, the reality is, over the long term, what does the Nasdaq do? What does the S&P do? It usually goes up. Okay, so we have periods of sideways chop, even periods of down movements, and of course up movements. But over history, if I show you guys, literally this thing has pretty much more or less it's only ever gone up. Okay, that's pretty much what you're looking at here. So it's not perfect, it's not straight up. Again, market moves in waves, they move up and down. Sometimes you have bear markets, they're rare, but sometimes you do have them. Most of the time you have a bull market, and then sometimes you have sideways consolidation. So in terms of technicals, I mean, it should be pretty obvious why we think it's going to be higher by the end of the year. So I've gone over this already. You got the Fed rate cuts, you got the elections, you got the Fed's going to be printing money. China's already printing record amounts of stimulus. The crypto bull run's coming up. We're in the halving year. Bitcoin usually goes to all-time highs around December. Trump's likely going to get reelected, and he's pro-crypto. He wants to give everybody tax cuts. That's obviously very bullish for the economy and economic spending and stuff. Because when people are not paying as much money in taxes, they obviously have more take-home pay, which means they have more money to spend in the economy or whatever they want, right? Good for stocks, good for crypto, good for the overall GDP. And you can see the technicals here. We are about to have a golden cross on the weekly time frame. Again, last time we had one of these, it was an absolutely massive move up. And then, of course, the RSI is still in the bull territory, so I don't think I need to say more about that. But on the flip side, a lot of people say, "Oh, well, this stock or that stock or whatever is safer in a bull market than this fund is." Guys, look, let me show you something, okay? And I've gone over this in previous videos, and my goal here is not to terrify anybody. Again, I do believe we are in a secular bull market. I do believe we're going much higher in the months and at least in the next year and a half to 2 years to come. But here's what I want to say about this, okay? In the last bear market we had, which was in 2022, Nvidia, which in my opinion is, the king of the tech stocks, king of AI. This thing, before the AI narrative really took off, pulled back 69%. Okay. MSTR, MicroStrategy, which everybody's bullish on and good reason to be bullish right now. There's a time and place for everything, in my opinion. Now is the time to be bullish. That's just my opinion. Whereas back here at the top of the previous bull run, which was actually here in November, not back here, but here in November, would have been the time to be bearish. Now is not the time to be bearish, in my opinion. 89% pullback. Okay. Even other stocks that people love, like let's say Tesla. What happened with Tesla in 2022? This thing got absolutely destroyed. And again, I don't think that we are heading into a bear market. A lot of people say that. Again, take a look at the Wall Street cheat sheet. Usually when everybody's swinging one side to the extreme, the opposite usually happens. I have seen a lot of bearishness, and I think these people are going to get squeezed, and then they're going to be believers and be like, oh, well, maybe I should be bullish. And yeah, maybe they should be. I don't know. I mean, that's up to them. But I mean, guys, we're looking forward in time here. Okay. We're not looking at these markets with a particular bias. We're just telling you guys what we think is likely at the time. Okay. But I can go over some others here, even things that people consider to be safe stocks. Okay. Let's take a look at Microsoft. What happened in 2022? Minus 38%. Let's take a look at Meta. Everybody loves Meta right now. What happened in 2022? Nobody loved Meta. Okay. Meta was down 76%. Let's even take a look at something like the banks. What happened with JP Morgan? Minus 40%. As a matter of fact, what happened with one of the strongest companies in the world, in my opinion, and that is Amazon, because again, everybody loves having stuff delivered to their front door, and they have their hands in all kind of pots. Minus 55%. I can even go over some other stronger companies. Let's take a look at Pepsi. Okay, Pepsi did go up during this time frame, but I don't know if you noticed this. This thing did have sharp pullbacks along the way. Okay, 13%, 12%, or 13% again, 11%, and recently it just also had another major pullback. If I even take a look at something like, let's say, FRT, again, I know this is a REIT, but usually when the Fed raises rates, real estate and financials get hit the most, minus 38%. Even if I take a look at something like, let's say, this is another one we used to own, National Fuel Gas, okay? So this one did actually go up. Again, oil was a very bullish play during the bear market, but it just goes to show you that a lot of these, like a lot of these stocks that people are looking at, I mean, they just got absolutely decimated. So to say that anything else is better than something like QDTE is kind of ridiculous. They need to know what they're talking about first. You can see here minus 80% on Square. If I go over something like, I don't know, let's pick another one. Let's say PayPal. You can see how even more ridiculous this is. This thing is just now starting to recover from a massive drop that actually lasted longer than the bear market, minus 85%. I mean, there's so many different companies in here that just got absolutely destroyed. The miners got destroyed. Bitcoin, crypto markets got destroyed. The meme stocks got destroyed. So to say anything in particular is really safe in a bear market, or you'd be better off owning this in a bear market, I completely disagree. I think that there are some positions that people can get into that are safe to get into in a bear market, but again, to say that a fund is bad because, oh, well, it's going to erode over time. Well, it depends on how you manage it. It depends on when you buy. If you're buying something like QDTE on the dip in the NASDAQ, like you take a look at the NASDAQ every day and say, okay, when this thing has a major dip on the daily or the weekly time frame, I'll buy in. You give yourself a better chance of having increased performance over time. Even if you did this exact same strategy with something like GPIC, which has much more share price appreciation, you'd be better off. Like if you had set on cash and kind of started buying more and more aggressively as we dumped here in August and then again in September, well, guess what? Your share price would be up massively. So this is actually kind of what we did. We did a little bit with this one, but I'm actually going to show you another one that we did this with. Because again, we're trying to be selective here because we, the markets are kind of in a processing phase before they go higher, in my opinion. So you can see we're only down 5%. At one point, we were down much more than this. Again, we kind of bought this one on the dip when it looked like it was really ugly. And we kind of bought, I think, like somewhere here in September. And then we basically just scooped up some shares somewhere between 46 to 50. And now our cost basis is reduced, and you can see we're only down 5% versus what we were down before. And of course, the dividends have given us a nice total return. So, I mean, look, the NASDAQ usually goes up a time, so QDTE should go up a time. I mean, if you're really worried about it, you could always try something else out, like maybe GPIC or, but you can see even GPIC, like if I take a look at GPIC and I look at something like QDTE on the charts, you can see it's not quite identical, but it's not really far off the mark either. I mean, this thing opened up at 46. If I just measure from the current price to kind of the opening price, you can see it's down roughly about 8-9%, something like that. If I go over to GPIC here, and again, this is kind of an apples to orange comparison, but that's not the point. The point is that when the NASDAQ is off the all-time highs, most of these funds are going to be off all-time highs. You can see it's down from the all-time highs roughly about 5.5%, whereas it is actually up from basically the bottom there in 2023, roughly about 19%. Of course, the NASDAQ was lower in price in 2023 than it currently is now. And that's the point I'm trying to make. A year from now, likely the NASDAQ is going to be higher than it is now, which means what? QDTE will likely be higher than probably what it is right now. If you're really concerned about it, you can always take a look at something like, and I know this is a very popular one that everybody loves, JEPQ and JEPI. And then you wouldn't have to worry so much about it. This thing, as you can see, it pretty much more or less really just does go up with the market. You would only currently be down roughly about 3%. However, just understand with JEPQ and JEPI, the payments usually are a little bit lower than QDTE, and GPIC or something like GPIX, that is kind of the trade-off with these other ETFs. You're getting more income than you would with something like JEPQ. But even if I measure this massive drop in the flash crash, you can see it pretty much went down almost equivalent with the NASDAQ. So the JEPQ was down 15%. If I actually go down here to, or actually I could take a look at the NDQ. We'll look at the NDQ. So you can see JEPQ was down 15%, and the NASDAQ was also down 15%. So there really was no downside protection in JEPQ other than the fact that you were getting income, which is technically true about both QDTE and GPIC. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.